Joe Kraus, when we met years ago, you were a serial entrepreneur. You started Excite. You started a company called JobSpot and sold it to Google.
Yep.
Now here you are at Google for a while now doing venture investing. What is Google doing in the venture business?
Google's always been about innovation, and I think the founders of Google, Larry and Sergey, are very passionate about fostering that sense of innovation, be it at Google or be it in the broader community. And I think that's a continuation of that.
But it's unusual for a public company to just be making investments to get a return. I mean, what is the combination? What information goes from the companies that pitch or the companies you invest in makes it to Google itself?
Sure. I would argue that it's a prerequisite for a venture arm to do well to only have one motivation, which is to make money.
Right.
If a corporate venture arm in particular has a strategic rationale, we should do deals that further the strategic mission of the company, those don't end well for anybody.
What other public companies have venture arms? I know that Intel obviously has a well-known one.
Well, generally speaking, one of the challenges in corporate venture historically is that companies get in when times are good and out when times are bad. And so you ask the question, who has a corporate venture arm? The answer is a lot of people have and then didn't. And one of the great things about Google, certainly with the balance sheet that we have and the commitment to innovation that we've got, we're going to be around a long time.
Now, for you, someone who's started two successful companies, sold them, one was sold to the public markets and Excite before it became Excite at Home and hit the skids. We don't need to go into that. That was after you were already gone. Another one that you sold to Google for a lot of money. When you meet with entrepreneurs, what do you feel like you can say, sign with Google, we can give you what?
So one of the things that Google did is we said we have to compete in a very competitive landscape with some very big names in terms of venture backing. And so I thought a lot about what did I need as a Series A entrepreneur. And I've raised money from Kleiner.
Jargon alert. Series A
I'm
means,
sorry. What did I?
It means someone who's getting in really at the early stages at the garage band kind of level.
You've got an idea. Somebody's giving you some money to pursue that idea. You don't have code. You probably don't have a full team. That's what I mean by Series A. So I've raised money from Kleiner Perkins, Redpoint, Mayfield, some of the top firms in the Valley. And generally speaking, what I needed at that stage was not what they were providing. What they were providing was help hiring a senior management team and connecting me with partners and customers. I'll tell you what I needed. I needed the world's best designers that made my website look amazing, made it tell a story, made it easy to use. I needed the world's best engineers. Startups go through these desert phases. You don't know what your business is. You don't know exactly how you're going to make money. Best way to get out of that desert is to have the world's best engineers. And so when I came to Google Ventures, one of the great mandates that Larry has is he'd rather somebody fail spectacularly than achieve mediocre results.
So is it about hiring, or is it about making connections with people?
We built up a team of people at Google Ventures. 3 of the world's best designers and user researchers. We redesigned 10 of our portfolio companies' products last year with that team.
Well, that's interesting.
A team of technical recruiters with a mission. We will get you 5 world-class engineers and we'll teach you how to hire the next 20. We've started a world-class teaching university because one of the things that 22-year-old startup guys, I was one of them, you don't really know anything. You don't know how to hire great people. You don't know how to run a great engineering organization.
But that's part of the advantage is that you don't know what you don't know.
Well, that's true. That's good from a market point of view because you're not polluted with what hasn't worked in the past. But you still need to know, how do I run an engineering organization? How do I do user testing? We have a world-class teaching institution that teaches our startups how to do that.
So it sounds like you've essentially got a toolkit to provide some of the companies that you back with the stuff they need.
That's right. A traditional venture model is one in where the individual partner does everything from source the deal to help their companies. We take much more of an operational company model where the partner is essentially the CEO on the deal, and there's a team of people behind every investing partner of designers, technical recruiters, educators, engineers, business development people that swarm in and help those companies
It's a very
succeed.
different approach. All right, so give me a 10-second advantage or example of something that's worked.
Oh, sure. I mean, the design team in particular has been amazing. We've been working with multiple companies. We redesigned, as I mentioned, 10 of our portfolio company product last year. In each case, we doubled any of their individual success metrics, be it click-throughs, revenues per click. We have had a material impact on what those companies have been able to achieve.
There's got to be baggage, though, that comes with, I'm with Google, I'm here to help. It's not quite, I'm from the government, I'm here to help. But it's kind of close in the tech community. Google's a very big company with a lot of challenges from whether it's the Justice Department or just competitors. what is the disadvantage of Google? What do you have to get over when you're
I think
pitching?
one of the things that we have to help entrepreneurs understand is that no information that comes to Google Ventures passes to Google. Some people are worried, am I going to tell my idea to Google Ventures? Is that going to end up at Google? And the answer is no. We will be dead as a venture arm as soon as it ever would occur that information from an entrepreneur gets leaked back to Google. That is a critical issue for us. So we keep all that information secret.
What do you look for in terms of liquidity event? Is the IPO the perfect end for a company for you, or the perfect exit for you from an investment standpoint?
It depends upon the stage at which you're investing. One of the things that we do is we're very active in the seed space. So that means companies that are raising maybe $500,000, well, we'll write a $100,000 check. We'll do 80 to 100 of those kinds of deals this year alone. For those companies, many of them will experience a buyout in the $10 to $35 million range. It's not what you're hoping for, but that's a good outcome. What you want are the companies that you do that and have billion-dollar exits, but it's especially important as you get into the later rounds of financing. So as you're looking at a company which is raising $5 million, $10 million, there you are really looking for the IPO, or you're looking for a company of high consequence that maybe gets taken out by a very large public entity.
Do you feel like the failures, the companies that blow up because you're Google, get more attention than they would otherwise if you were even a Kleiner Perkins or a Mayfield or a Redpoint or something like that?
Good question. We haven't had enough failures yet to know. That's only because it's not that we won't have failures, it's that we've only been in operation about 2 years.
I'm sure you'll get your chances, but we'll look forward to both your failures and success. Failures are great for me from a journalistic standpoint. I don't care if you lose money. I get a story to tell, but I'm glad you're here to help us tell that story. All right, Joe Kraus, thanks. And